Hello investors, welcome to Simpli Stocks. In today's video, we will be studying transformer companies. With the arrival of green energy, the demand for electrical equipment is also rising, because of which the transformer sector is in a lot of focus right now. So in today's industry analysis, we will understand the transformer as a product. We will study the transformer sector, and then we will look at all the companies in the sector one by one. And finally, we will see the main risks related to this sector that you need to keep in mind if you are interested in this sector. But remember, this video is in no way a buy or sell recommendation on these businesses. With that being said, let's begin. After electricity is generated in power plants, it is transmitted to our homes and industries at different voltage levels. For example, first come the 400 kilowatt and 765 kilowatt power lines, which you must have seen far away from cities. These are very large, very tall towers. When electricity has to be transmitted across long distances, high voltage lines are used. The higher the voltage at which electricity is transmitted, the more efficient it will be, and the power loss will also be low. Then at power stations, this high voltage is converted to 66 kilowatt, 132 kilowatt or 220 kilowatt. This is still high voltage. Please remember these figures of 400, 765, 132 kilowatt. I will tell you their significance later. Then it is converted to medium voltage at 11 kilowatt or 33 kilowatt. And then this current is further stepped down to even lower levels in substations. This work of increasing or decreasing voltage is done by transformers. Basically, transformers are used in power transmission and distribution at multiple stages to increase or decrease voltage. And it is not like that the electricity which is produced in solar or coal power plant is directly generated at high voltage. No. That is also generated at low voltage, which is then stepped up to high voltage for transmission. Broadly, there are two types of transformers: step up, which increase voltage, and step down, which decrease voltage. So in this image, you must be able to see that transformers are being used at different stages. First come the step up transformers, which are used in power plants to increase voltage. Then in the transmission substation. After that, in the distribution substation, step down transformers are present. And finally, you must have seen that outside the locality or society where you live, there is also a transformer. We don't need to go too deep. To summarize, what we mainly need to understand here is that transformers are used at different stages in the network, and they have different power ratings. A substation transformer will be of extra high voltage class like 400 kilowatt or 765 kilowatt. The ones in localities have lower ratings because their purpose is different. Similarly, the ones used in power plants have an entirely different use case. That is a step up transformer which increases voltage so that electricity can be transmitted. In the same way, in different types of power plants, solar, wind, coal, different types of transformers are installed. As you can see in this screenshot, CEA has laid out demand expectations of transformers of different ratings by 2030. Apart from voltage ratings, transformers are also classified based on different use cases. Power transformers are used in high voltage transmission and distribution. After that, distribution transformers are used for low voltage applications and local distribution networks. Furnace transformers are used in factories and industries to increase voltage. Similarly, duty, converter duty, and instrument are also other types of transformers. But broadly, the job of transformers is to step voltage up or down so that electricity can move from one place to another. Overall, India's transformer market is growing at around 8% CAGR, in which some segments such as those above 400 kilowatt class and solar transformers are growing much faster. Finally, if we talk about demand drivers, regular power demand is increasing anyway. Apart from that, because of wind and solar power plants, more transformers have to be installed. Similarly, data centers also require a lot of transformers. The metro rail network is expanding, so transformers are needed there too. Apart from this, there is replacement demand as well. To improve transmission networks or for safety, old transformers are being replaced with new ones. This replacement demand is coming more from developed countries like USA. So the export market is also a big opportunity for Indian transformer companies. We have completed the difficult task of understanding the product and sector. Now we will study the listed transformer companies in India. In this, we will first look at small caps. The reason is many players in the small cap space are working aggressively on increasing their manufacturing capacity. There can be opportunities there. After that, we will study the large cap companies. The first business we will study is South-based Supreme Power Equipment. This is an SME company, but one thing that I liked about them is that despite being an SME, they are releasing results and investor presentations on a quarterly basis, and they are also conducting conference calls with investors. Currently, Supreme makes small 22 kilowatt transformers. They have a total 2500 MVA manufacturing capacity, which by this December they will increase 3.5 times to 9000 MVA. They are expanding very fast. Their target is to bring 38 to 40% sales growth this year. After expansion, in the first phase, they will be working on higher capacity transformers of 160 MVA, 220 kilowatt, and then going forward, they also have goal of making transformers up to 315 MVA, 400 kilowatt. This business is currently trading at a PE of 25. You can study it yourself. Growth and future plans both are good here, but you must know that there is one risk with Supreme. Just because they have capacity doesn't mean they will be able to bid for large orders easily. In transformers, power companies are very strict about testing and safety standards and how much experience the manufacturer has. Orders are not given that easily. So we will have to see after the capacity goes live how their order book scales up. Next is megatherm induction for foundry companies or whichever sectors where steel melting work is done. Megatherm makes induction furnaces or smelters for them. And to run those furnaces, they also make transformers. The interesting thing here is that they are now entering the transformer business. They have been making induction transformers already, but observing the growth in the sector, they have plans to separately focus on this segment and grow it well. Last year or in FY25, you will see that Megatherm had sales of 300 CR, of which around 45 to 50 crore contribution was of transformers, and the remaining 250 CR was the large share of induction furnaces. In the next 2 years, their target is to increase sales from 300 crore to 500 crore. The induction business of 250 CR is supposed to become 350 CR in value, and the transformer segment, which is currently at 45 to 50 crore, will be tripled to 150 crore because very good growth is coming here. So on a small base, their transformer business can bring good growth, and consolidated sales over the next 2 years can grow at 25 to 30% CAGR, and net profit can grow at 45% CAGR. Megatherm is at a PE of 28 right now. It is also a portfolio stock of Ashish Kacholia. If you want, you can study it independently. Then we have Danish Power. Danish, like Supreme and Megatherm, is also an SME. Currently, they have a total of 4,500 MVA capacity to make transformers, which by the end of this year, they will more than double to 10,000 MVA. They make power transformers up to 100 MVA, 245 kilowatt class, and distribution transformers of 5 MVA, 33 kilowatt class. Apart from this, they also have capabilities to make transformers for solar and wind plants. But the issue here is that they don't release investor presentations, nor do they conduct conference calls. So we don't have much information about which direction the business is going. So personally, I would give preference to Supreme over Danish. Next, let's look at Voltamp. Voltamp has 4 manufacturing facilities in Gujarat with a total capacity of 14,000 MVA, where they manufacture oil-filled power and distribution transformers up to 220 kilowatt and dry-type transformers up to 33 kilowatt. This company is currently at 100% capacity utilization. So at the moment, there is no scope for growth here. That's why you will see last year sales growth was 20%, and in the recent June quarter, there was a degrowth of 1% in sales. However, if you see below, they are doing a capex of 200 CR, in the first phase of which they will be adding 6,000 MVA capacity for transformers with 250 MVA and 220 kilowatt rating. This will increase their capacity by around 40%. But I was checking, I couldn't find any timeline of this new plant going operational. Apart from this, their management also neither holds conference calls nor releases investor presentations. So there is not much information here either. Moving ahead, you may like Indo-tech's results, but their 100% sales growth and 224% net profit growth has come on last year's low base. They also don't release investor presentations, so information here is very limited. But in my understanding, they too are operating at 100% capacity utilization nearly. In the past 4 quarters, their sales and profits have remained range bound. They have 9,500 capacity, in which they manufacture power transformers up to 230 kilowatt and distribution transformers up to 33 kilowatt. So broadly speaking, Indo-tech, Danish, Shilchar and Voltamp have almost the same product portfolio. Indo-tech will be investing 75 crore rupees in the next 2 years to increase its capacity by 68 to 70% from 9,500 MVA to 16,000 MVA. But here too, the new capacity will come late compared to Indo-tech and Voltamp. The advantage Danish and Supreme have is that their capacity will come a little earlier. The next business we will study is Shilchar Technologies. Apart from power and distribution, they manufacture many other types of transformers as well. For example, they manufacture 33 kilowatt class step-up transformers used in solar and wind plants. In addition, they also make transformers for hydro plants or dams. Shilchar is showing good growth. Recently, they increased their capacity to 7,500 MVA and they are currently operating at 77% capacity utilization. In Q1, their sales increased by 48% and profit by 73%. This full financial year, they are guiding to grow sales by 28 to 30%, and for next year, they are targeting 20 to 25% growth. Shilchar has best margins in the sector. This business is currently trading at a P of 33. You can study it yourself. But in this whole segment of transformers below 132 kilowatt class, there is a very big risk of oversupply. If that happens, we may see contraction in their margins going forward. That is something you will need to monitor. We will discuss this in the risk section in the detail later. I don't understand Marson's valuation. This business is currently trading at a PE of 105 despite being so small in size. Recently, they increased their capacity to 10,000 MVA. But for me, there is not much investor communication either. So I don't have any view on Marson's. Now, so far, if you are liking this video, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and subscribe to our channel as well. Coming to our businesses, Quality Power is an interesting fast growing business. From April to June months or Q1, their sales grew by 144% compared to the last year. They also have capabilities to manufacture transformers above 400 kilowatt class, but most of their product portfolio is of other types of power equipment, where they make equipment used at power stations and products for high voltage direct current networks. Their profit margins are even better than transformer manufacturing. Mostly, all your large cap transformer manufacturers have expertise in electrical equipment. But if we talk about small caps, only Quality Power deals in such high-end products. We won't study this in detail, but this is an interesting business model which you can study yourself. Apart from Quality Power, we have another interesting business, Transformers and Rectifiers India or TRIL. TRIL has a target to grow its sales at 60 to 65% CAGR for the next 3 years. By far, in the entire sector, this is the fastest growing player. They have expertise in manufacturing transformers of all sizes, low, medium, high, and extra high voltage. Currently, they have 40,000 MVA capacity, and through expansion, they are adding another 22,000 MVA. Among small cap businesses, only TRIL has expertise in manufacturing high and ultra high voltage transformers. You will see mostly large cap companies can manufacture transformers of 400 kilowatt class and beyond. Right now, the heavy demand is coming for transformers of and beyond 400 kilowatt class. And the moat here is that Adani or Power Grid prefer those suppliers who have more than 7 to 10 years of experience in this. High voltage transformers play a very critical role in power transmission. If a transformer fails, it can cause huge losses. So power companies will not take that risk. The cost of a shutdown is much higher. And even if new companies enter, it will take them 6 to 7 years to prove their capabilities. So companies like CG Power, Quality Power and TRIL have a strong moat here. TRIL's valuation is a bit high, but it is a good business that you can study yourself. After TRIL, we are mainly left with 4 large cap players: Siemens Energy, CG Power, GE Vernova, and Hitachi. Schneider is not a large cap, but we will cover it along with these only. Now, see, 3 points, very important points, are worth noting here. First, all 5 companies have experience and expertise in manufacturing transformers of 400 kilowatt and 765 kilowatt. These high voltage transformers are used in your HVDC and HVAC projects. There is very good demand here, but supply is limited. So if we look at them from perspective of a business model and competition, large caps are better placed than small caps. Second, apart from transformers, these companies also make other power equipment used in substations and power stations. This includes your grid automation products, STATCOMs, switch gears, etc. They also have a portfolio of HVDC or high voltage direct current networks. This segment itself is growing at around 60 to 65% CAGR in India right now. We are thinking of making a separate video on this. However, these companies don't provide segment-wise information like how much sales are coming from transformers, how much from other products. So that is something you will have to see. That is a risk here. And the third negative point is that their valuation are high. You will see all these businesses are trading in the range of 90 to 150 PE ratios. In my opinion, many of them are mature from a valuation point of view. Now let's quickly look at these businesses. Let's start with CG. 35 to 40% of CG Power sales come from products like transformers and switchgear. The rest is their industrial product segment, which is not doing very well right now. That's why you will see in Q1, growth in power system segment was 43%, while in the industrial system segment, it was 16%. So consolidated growth reduced to just 29%. But from a large cap perspective, these are very good numbers. CG Power is also increasing its capacity. Their power transformer capacity will go up to 40,000 MVA and distribution transformer capacity to 9,000 MVA. As I mentioned earlier, CG has expertise in manufacturing high voltage transformers of up to 765 kilowatt class. For this, you will see they recently received a major order from Power Grid also. Siemens Energy was demerged from Siemens with power equipment business coming to them. Like CG Power, Siemens also has expertise in transformers up to 765 kilowatt class, but I couldn't find specific data on what percentage of sales come from which division or which products. You will like the order book growth of both CG Power and Siemens, but note that order wins are lumpy, meaning sometimes you may see many orders coming at once, then for some time there will be dry months. Apart from that, Siemens too looks mature to me in terms of valuation. It is currently trading at a forward PE of 115. Hitachi's PE re-rating has happened very sharply. This business is currently trading at a PE of 150. They have also received back-to-back new orders. Their order book has grown 365% compared to the last year. For Hitachi, I would say that unfortunately, we are late to the party and we have missed this rally. Among the large caps from both valuation and growth point of views, I like GE Vernova T&D the most. Their margins are good. In Q1, EBITDA margin was 29% and growth in the business is also strong. In Q1, sales grew 39 to 40% and profits have doubled compared to last year. Its valuation at 90 PE is also lower compared to others. And one more thing, its growth rate is also double compared to its peers. So you can study GE yourself, but you will need to track their order book growth. Otherwise, there will be a risk of slowdown ahead. I don't understand Schneider Electric's valuation. Even at a market cap of 20,000 crore, this business is trading at a P of 85. 40 to 45% of their business comes from power grid products, of which transformers is a sub-segment. Finally, let's come to risks and summary. First, let's look at two main risks. Then I'll tell you which businesses I like the most in the entire sector. The first risk is that this is a government-led sector. The government plans how many power plants will be installed, how much transmission network will be set up, and then tenders are issued accordingly for equipment supply. And this happens at multiple levels from central to state. State power corporations also issue tenders. In such a case, if there are delays in awarding new orders, there will be a big risk of slowdown. The second risk, which I already told you earlier, is that there is a lot of capacity coming in for transformers below 132 kilowatt class. Almost all companies are announcing capex back to back, and not just in India but abroad as well. So there is a very big risk of oversupply here. If that plays out, what will happen is competition will increase because supply will exceed demand. Then all companies will start cutting prices to increase their sales, and we will see margin compression going forward. This is a very, very big risk. That's why if you are invested in any small cap transformer company, you need to keep this in mind. If this starts happening, all the businesses will go out of trend. Among the small caps, only TRIL is a good business as it has the capacity to make transformers of 400 kilowatt class or above. Now, if I give my opinion and ranking, I would keep TRIL and Supreme on the top position. In TRIL, both growth and product portfolio are good. Supreme only because their growth plans are good. There is execution risk and margin risk from oversupply. So that is something you will have to watch out for. On third position, I would place GE Vernova T&D. In my view, its PE is lower compared to others. So there will be scope for PE re-rating in the short term. Among the remaining small caps, either growth is not that high or we don't have enough information to evaluate them properly. And apart from GE, the other large caps seem mature to me. Now see, a lot of time and effort went into researching and making this video. So please like this video. It will mean a lot to us. Also, you can subscribe to our channel Simply Stocks. For us, your likes and subscribes are the only motivation to keep bringing such videos to you for free. So please like this video and subscribe to our channel as well. I'll see you in the next video. Happy investing.